Okay, picture this, the largest solid piece of gold ever found in history.
Weighed, get this, a staggering 172 pounds. It was so heavy that two guys in Australia needed crowbars just to pry it out of the earth.
And here's the kicker. This massive treasure was found just 1.2 inches beneath the surface. And believe it or not, that one little detail holds the key to a huge economic mystery.
And that mystery? It's the real reason we all left the gold standard. And today, that's exactly what we're going to dig into.
I mean, think about it. For thousands of years, gold was money, no questions asked. One day you could walk into a bank and trade 34 bucks for an ounce of gold. The next day, nope. So what happened? Why the sudden shift? Most people will tell you it was politics, but the real reason is way more fundamental. It's not in some history book. It's literally in the ground beneath our feet. This wasn't a choice we made. It was an inevitability forced on us by the laws of nature. So to really get why it all fell apart, we have to go back to basics and understand what it even was. And honestly, the simplest way to think about it is this. Gold just was cash. And the system itself was actually pretty simple, kind of beautiful in a way. So when that massive 172-pound nugget was discovered, it got shipped off to the Bank of England. Now, the bank didn't just buy the gold. No, they'd take that gold, lock it in a vault, and then, and this is the important part, they'd print the exact equivalent value in brand new paper money. In this case, that was 9,534 pounds sterling, and that new money is what went out into the economy.
So you see, this created a super direct one-to-one link. A country gets more gold, it gets to print more money. Simple. But, and this is a big but, if a country lost gold, it was legally required to pull that same amount of cash out of circulation and destroy it. The entire money supply was literally tied to how much of this shiny rock you had sitting in a vault.
Right, so the crucial takeaway here is that the gold standard wasn't just some vague idea that, hey, gold is valuable. It was a really rigid, almost mechanical system. Every single dollar, every pound, every franc in your pocket was basically an IOU, a direct claim on a real, physical piece of gold that your government was holding.
And because gold is a physical thing, well, it can be stolen. Take the famous Brinks heist in 1983. 6 robbers broke into a warehouse near Heathrow and basically stumbled upon 6,840 gold bars. They melted the whole lot down, mixed it with copper so it was completely untraceable, and then just sold it back into the market. It was pretty much the perfect crime because, gold has no memory. Now, lucky for the UK, that gold was privately owned. But just imagine for a second, what if it had belonged to the Bank of England? Under the strict rules of the gold standard, the government would have had no choice. They would have been legally forced to find and destroy 336 million pounds sterling in cash to make up for the loss. And that gets us to the heart of the problem.
You see, this system created what you could call the Golden Constraint. It basically slapped a pair of golden handcuffs on the entire global economy.
I mean, just think about it. If you were the leader of a country back then, the 2 scariest words you could possibly hear were gold outflows, because that meant your gold reserves were shrinking, which meant your country's entire money supply was about to shrink too.
Now, I know what you might be thinking. Wait a minute. If there's less money, doesn't that make the money I do have more valuable? Isn't that a good thing? And, well, not for a growing economy. See, less cash means banks have less to hold in reserve. That means they stop giving out loans or loans become super expensive. And if businesses can't get loans, they can't build things like railroads or factories. Hospitals can't get funding. The whole engine of economic growth just grinds to a halt. The modern world runs on credit, and the gold standard could literally starve it of fuel.
So for a while we had a simple solution, just mine more gold. But eventually we hit a wall. And this wasn't a political wall, it was a geological one. The laws of nature itself stepped in. Just look at this timeline. For literally thousands of years, humanity was just kind of scratching the surface. But then, starting around 1900, the rate of mining just exploded. So much so that today, we've already pulled about 80% of all the gold we know about out of the ground. The easy stuff, it's all gone. To put that into perspective, let's say 500 years ago, you'd have to dig through about 2 tons of rock and dirt to find just 1 ounce of gold.
Today, on average, you have to mine and process a staggering 120 tons of earth to get that exact same single ounce. And this, right here, perfectly illustrates the core problem.
Think about this. The world's population was exploding. It tripled between 1800 and 1950, and then it doubled again. All those new people, all that new economic activity, it all needed a bigger money supply to work. But the amount of new gold we could find just couldn't keep up. It was geologically impossible. So leaving the gold standard, it wasn't really a choice. It was a mathematical and physical inevitability.
Okay, so the world's governments officially moved on. But that doesn't mean gold is some useless relic. Far from it. In fact, for hundreds of millions of people around the globe, it now serves a new and absolutely vital purpose. It's become the ultimate modern safe haven.
And to get why, you need to know this term, capital controls. Basically, these are rules that governments put in place to stop people from moving their money out of the country, especially when things start to get shaky.
And the difference in financial freedom around the world is just stark. Here in the US, there's no limit on how much foreign currency you can buy. But in India, you're capped at $250,000 a year. In China, it's just $25,000. And in Russia, after the invasion of Ukraine, that limit dropped to zero. The government can essentially trap your money inside its own borders.
So put yourself in their shoes. You live in one of those countries, and you see a crisis on the horizon, a war, a market crash, whatever. You want to protect your life savings, but the government says you can't buy US dollars. What do? You buy gold. It's the universal safe haven. It's anonymous, it gets around those capital controls, and heck, you can even smuggle it across a border by just wearing it as jewelry. For millions of people, this isn't an investment strategy. It's a financial survival tool.
So here's the bottom line. The world's governments left the gold standard for good, mainly because, well, they had to. The geology of our planet forced their hand. But for countless individuals living in economies that feel just a little bit shaky, when push comes to shove, gold still is and probably always will be the standard.